let's start with the elephant in the room. The big market sell-off, which started on Friday, thanks to Donald Trump, who sent out a tweet saying that the U.S. is now going to levy 10% tariffs on an additional $300 billion of Chinese imports. This kind of surprised a lot of people in the markets, which started to crash after his tweet, right? We thought everything was going along smooth and they were meeting and everything was fine, so it was a surprise. The markets were up a few hundred points midday Friday, right before the tweet. And then after the tweet, they sold off hard, falling more than 500 points from its highs. Did rebound a bit on Friday. We're talking about the Dow here. But then came the fireworks on Monday. The market started selling off again, falling 800 points on the day. So to begin Monday, pre-market, stocks were down about 300 points, opened up, and then during the day, it was just key technical levels that were breached. The algos kicked in, and before you know it, the whole world is selling. We're down 800 points of the news that basically happened midday Friday. So the sell-off sparked a few emails from you asking if you should go into cash now, just off of this sell-off, even though stocks were literally at near all-time highs a couple weeks ago, heading into earnings season. I expect that. People get nervous. They watch TV. It's all crazy. And you know what? I responded to almost every one of these people. It wasn't a lot. It wasn't that many people. But I just responded and said, hey, you know what? Shut the TV off. Stop reading anything financial related and go hang out with your kids. Or do something fun. Because all this is just BS. It's not going to impact the long-term outlook on the markets at all. And that's what you should be focused on long-term. Now, before you, I'm referring to my listeners who do not like my opinions on trade, you may want to fast forward, but before you fast forward to the interview, which we have a great interview set up, guys, today. It's a first-time guest. He's awesome, and you're going to love. But before you tune me out here, seriously, just give me a listen, because I promise I'm going to make a lot of sense. Promise you. And just to show that I'm not a hypocrite, I've been a little critical of Kyle Bass because he's been bearish such a long time and wrong. I respect him, though, because he puts his money where his mouth is, unlike a lot of other notable bears who have become rich over the past 10 years, despite everyone they give advice to are flat out broke. I won't mention names. But Kyle Bass got on CNBC yesterday and gave his opinion on trade. I had CNBC muted at the time. By the way, I'm telling you guys to shut off CNBC. I watch it because it's the best way to gauge sentiment in the markets. And they have some good interviews on there. But, maybe you just want to shut it off during those extreme times because it gets a little crazy. But anyway, I have it on mute, and I see Kyle Bass' name across the screen. I'm like, here we go. Mark's down 800 points. He's a bear. I wonder what he's going to say. But he started talking about trade. And, man, I love what he had to say. He was like, look, I'm not a Trump supporter or even voter for Trump, but what he's doing is right and important. So China claims to be at 15% of global GDP in dollar terms, but less than 1% of global transactions settle in their own currency. What does that mean? It means they have to support their own currency and need dollars to do it. Basically saying you better stop playing hardball. He also talked about China-U.S. negotiations. So last year, where were we, right? It's been going on for about 2 years now. They promised to buy agricultural products for us, stop stealing our intellectual property, make trade fair. They said all of this, and they did nothing, right? So what do? We levied tariffs on their goods, and that's what started the so-called trade war. People love using a trade war. It's not a trade war, guys. I'll explain why it's not a trade war. Relax. Now, fast forward to today. And there's been some, ups and downs in trade and whatever. Almost every sell-off I said, look, this is nonsense, buy stocks, and it kept going higher and higher. Now we're back again, right? Because what are we seeing? Well, the current round of negotiations, which took place in China last week, with delegates from both sides present, China said, when they sat down at the table, they said, before we engage in talks, you, meaning the U.S., has to drop all tariffs on goods right now, stop disallowing Huawei to sell goods to the U.S., and release the CEO of Huawei. So China said, that's the first thing they said when they sat down, right, engaging in talks. And we said, basically, go F yourself. China delegates got up and walked away from the table. Literally, just got up, walked away. So our delegates reported to Trump, told him what happened, and Trump said, hey, okay, If that's what they want, then we know what we got to do. He came out with that tweet, levied another 10% in tariffs on Friday, or an additional $300 billion worth of goods, and that's 10% tariffs, which I think would trigger September 1st or something, early September, if they don't come to terms. Now, I know this is going to be difficult for some of you to comprehend, and I get it. I really do, because emotions are crazy high these days. And people have strong opinions, social media. It's so much easier to say stupid shit when nobody knows who you are, or you're not face to face with someone. I mean, that's our world today, right? When I grew up in Queens, you said something to people's face. If they didn't like it, you got into a fight. Now you can say whatever you want, your way, and you get more aggressive because you're not in front of people. But you would never say the things on social media that you would say in person. No way. But emotions run high. Just look at your Twitter. Just look at Twitter. Look at Facebook's a little different, family oriented. I mean, Twitter, it's 80% of the posts are angry, negative, people pissed off. It's the way it is. So I get it. I know emotions are running high these days. But I'm talking about something a lot different, because this podcast is about investing, about helping you make smart investment decisions, so that you, your kids, and their kids can be secure. I'm talking about creating generational wealth. That's why I have this podcast. I think that's why most of you listen. But that's the goal. When it comes to politics, I don't care which side you're on. I don't care who you like, who you hate. So put your emotions aside for just a minute, and let's talk business. Because what Trump is doing on trade is right. China has been stealing from us and taking advantage of us for decades. We let them steal our intellectual property and never did anything for decades and decades. We allowed them to jump to cheap commodity, cheap steel on our markets, which crushed the industry and resulted in thousands of people losing their jobs. This stopped under his presidency. Just look at the data on this, which I provided my tariffs report, which still a lot of people downloading. Free, by the way, available on our site, curzonresearch.com, if you want my opinion on trade here. More details. But China has a massive trade deficit with us, which doesn't have to be that big if they just bought maybe some of our cars, soybeans, natural gas, agricultural products from us. These are facts. Not debatable. And something needs to be done to stop them. Right now, we have employment near record lows, a stock market at historic highs before this pullback, consumer spending very strong, housing market pretty stable and getting better because interest rates going lower, mortgage rates are lower, more people are refinancing, buying houses. But now's a perfect time to do this, right? When the U.S. is in a position of strength. And again, I'm talking business here because picture this. Picture your Apple. And nobody really cares about it. You don't care about Apple. I care about Apple because, with earnings and stuff like that. But you just use their product, their iPhone. It's awesome. Their iPad, the Mac, you use all the products. It's cool. And have fun and tweet and laugh and whatever, right? But behind the scenes, Apple, and you could go into Walmart, Comcast, all these large companies, just choose one. They control their suppliers. They do not let their suppliers dictate terms with them. No, they've earned that right because they're huge and everybody wants to deal with them. If you sell a product, you'd like to sell it in Walmart. Yeah, your margin would be a little low, but you'd make it up on volume since it's the biggest retailer in the world. Big box retailer. But if you're going with Apple, you're not going to let, Apple's not going to let their suppliers dictate those terms or have, say, Skyworks, Areva, Micron, Texas Instruments, whatever else. I can name 30 companies right now that have stuff in iPhone. I've covered this. But you don't have these chip companies saying, hey, you know what? You need to buy our products, our chips at, say, whatever, $100 each instead of $50. And also, we're going to run a deficit with you forever, Apple. That's what we're going to do. All right? So we're not even going to pay you right now. We'll pay you a different time, and this is what we're going to do. And by the way, Apple, we're telling you this. We're going to try and steal your intellectual property every single chance we get. You know what Apple will say? They'd say, fuck you. We'll use other suppliers who are lined up around the block to service us. They'll help us lower costs and generate more profits. That's what we're trying to do with China. It's that simple. If you're a business owner, which I know so many of you are because you email me, if you're a business owner, would you do business with a company that's stealing your intellectual property? No matter how big that company is, you would never do it. That's your intellectual property. It's the biggest asset for your company. So those of you saying that the U.S. is wrong for calling out China and going through all this stuff, either have an agenda, they're trying to win an election, or they're just complete idiots and don't care about the data. What's even crazier, that's a word, crazier, is that there are experts that I constantly see on TV, or so-called experts. It's funny how they label themselves experts. I think it's great. That believe the U.S. will be in worse shape than China if we have a drawn-out trade war. Let me tell you something. China is done. Sell China right now. Because even if they negotiate a deal, the damage is already done. Companies are moving their supply chains out of China. You're seeing that with the numbers. And companies are basically telling you this on their earnings call because they don't like that uncertainty. They need to get out of there. They're going to move their supply chains, a small part of them, until they get all their supply chain, wherever, because they don't want that uncertainty where they're not going to be able to measure their costs. It's almost like Walmart or Target, some of the biggest retailers who have trucking fleets not locking in or even say airlines not locking in the price of fuel. Imagine if you don't lock in the price. How do you dictate how much you could spend CapEx unless you lock it in the futures market? You don't want that uncertainty. You don't want to have things going great and all of a sudden oil goes to $130, $150 wherever, and now you want to lock in your costs. This way you have a 3-year plan of here's what we have to spend, here's what we're going to buy new planes, we're going to buy new trucks. That's what companies are doing. You're seeing it in data, and they're telling us this. So they're removing stuff out of China already. But let's just say that we don't come to terms with China, and this gets drawn out long term, right? Let's take a quick look at the numbers. Because China shipped nearly 20% of its exports to the U.S. last year. We're by far their biggest customer, outside of Hong Kong, which is basically China. But the next biggest is Japan, which is 6%. I think South Korea, Vietnam, like 5%. They have how many countries, to fill in the gap. Now, if we decide not to trade with China anymore, which is never going to happen, but let's use an extreme case because these days that's all you hear in the media, right? That's all you hear. That's all the media. It's extreme cases and what. So let's go really extreme, right? Pretend with media right now. If we cut off China, who are they going to sell their products to? Who are they going to sell those specific products to? We account for a 20% customer. How would they make up the difference? Given that we're the largest consumer in the world, one of the highest personal consumption expenditures per capita, which is a fancy way of saying that you as consumers like to spend a shitload of money, more than anybody else, almost more than anybody else on things. They just love to spend. That's great for someone selling products into our market. But how are they going to make up that difference? Please, somebody tell me that. And remember, China's economy is already weak. Its housing market is in bad shape. Massive debt. Consumer spending is weak. Look at the numbers. It's like a black hole. Now, imagine taking away a 20% customer from your business. What would happen to your company? And considering that 20% customer would be the difference between you reporting a profit and a loss every year, or basically having a decent business, or having to go bankrupt and fire all your employees. A 20% customer. Now, if you're the U.S., you can buy these goods almost anywhere. Who wouldn't want? People are going to be producing these goods like crazy. Imagine if someone said, hey, we're going to spend hundreds of billions of dollars with you if you could find a way to create these products at the cheapest price. Well, China's been that country, but now it's going to be Taiwan, Vietnam, and other countries will line up to pick up the slack. And yes, it may cost us more, which would pressure margins a little, and maybe create a little inflation, which is not the worst thing. I mean, the Fed's been trying to do that for 8 years and has been unsuccessful. But everybody's so worried about inflation right now. But we can get goods from anywhere. Anywhere. You can't sell them to anywhere, but you could get them wherever you want. If you're willing to pay for something, people are going to they're going to make it. And I'm sure they want to deal with the U.S. because having a good trade partner comes with a lot of benefits, different things that you could do behind the scenes. I won't even go into that. So if you look at China, they have so much more to lose here. And they're absolutely crazy for playing hardball. I mean, you want proof. Listen, if you think I'm crazy, just look at the stock markets. Guys, pull it up. You go to Google, go to whatever charts you see, whatever charts you have, And just pull up like the U.S. stock market compared to China's. And look at the differences on what happens when negotiations break down. I mean, you're looking at China selling off more than 2x than us, much more than us. And when things start looking good again, China rebounds tremendously, moves almost at a 2x pace above ours, right? That means they're more leveraged. They have much more to lose and also to gain than us. Now, going even further here, for all those who think our trade fight with China is an end-of-the-world event. It's an end-of-the-world event. Holy cow. It's just trade wars. I just laugh when people say trade. We're not in a trade war. It's okay. This is negotiating tactics. I mean, if you look at the numbers, an extra 10% in tariffs on $300 billion in goods amounts to $30 billion. The U.S. economy is $20 trillion. China is what, 13, 14 trillion? I mean, so this amounts to what? Less than 0.2% of the U.S. economy? It's nothing. It's nothing. What you need to know as an investor is tariffs are a way of communicating. This is how we communicate with China and how they communicate with us. I know you say, well, Frank, look at the market sell-off. It's accelerated. I mean, the market was selling off on Monday, 800 points, right? So you're looking at the markets, and I have access to a ton of amazing research, even from technical analysis, and seeing the technical levels that will be broken. Kind of when the market opened, there's a lot of people, the smart, I'm not saying people are smart or whatever, but the algos are going to kick in. Certain levels are going to get hit, and the people that I spoke to that I know best who are really great in the markets, they knew the market was going to sell off a lot more than that. They start coming. They see it coming, all the algos start triggering or whatever. But this is on news that happened on Friday. And again, it's overreaction, right? It's all behavioral. We're going to talk about that with my guests later. And people get scared, they sell or whatever. Then you got the algos who don't care about companies or anything. They're just, looking at market triggers and getting it ahead of everybody else and selling. Again, they don't even know what companies, what they do, whatever, but they're just trading in and out of it. But the big deal here with all this communication, everything, is we want China to stop stealing our intellectual property. We want them to lower the deficit by buying our goods, like agricultural products, whatever, natural gas, cars. And they refuse to. They continue to lie to us and not follow through on what they're saying. I mean, it's very, very simple. And there's a stubbornness there, and maybe they don't come to terms with us. But if that's the case, I think it's kind of important to swallow your pride, because China's economy is going to be in shambles. I mean, it's already crashing, and they basically undo all the growth they've seen over the past 15 years. If they're going to, again, extreme example, lose us, which they won't. It's not a trade war yet, guys. This is communication. Don't fall into a trap and watch everything on all the media channels. Again, their job is to scare the crap out of you. This way you're watching. This way they generate more money off their commercials. That's their goal. Their job is to get viewers. How do you do that? You don't say, well, this isn't really a big deal. Because nobody can. No. This could escalate. Last time we had a trade war before World War II. Look what happened. They say that's the cause of the World War. So it's so easy to scare the crap out of people because your message gets sent to everyone in seconds all over the world. But just take a step back a little bit. They're communicating. It's okay. We're coming off highs, all-time highs. We're down a little bit. Maybe we pull back a little bit more. But just put things in perspective. Because if you're looking at China, they have a lot more to lose than us. So doing this segment here, I know most people don't like Trump. You think he's a racist, chauvinistic pig, a lie, whatever. But put your personal feelings aside, because Trump on trade, on this specific subject, is dead on. And this will work out for us in the end, despite what the experts in the media are telling you after the market falls 800 points in a day. Again, their job is to scare you. I mean, how many times do we have to hear this since China and U.S. have been fighting about trade for, I mentioned about pretty much 2 years now? How many times do we have to hear how the U.S. is in big trouble? The market's going to crash. I know I heard that at least 7 times over the past 2 years after every initial sell-off in the market. And every time, smart investors use it as a buying opportunity and stocks roared to new highs. We're back at the same scenario again. And later in my educational segment, I'm going to tell you how to position yourself again to make some big returns over the next 6 months as trade war tensions are likely to die down again. Unless China wants to destroy its economy, I still don't see that. And the market will push back to new highs again, probably over the next few months, which sounds crazy, but the last 6 times the S&P 500 fell by more than 3% in a day, this is dating back 2015, the S&P 500 popped an average of more than 2% 3 months later. Pretty cool stat. Thanks, Evercore. Research for that. But I see the market hitting new highs definitely before the end of the year and into next year with the Fed lowering rates, which they have to do regardless of data, since the current rate is 2.25%, which is much, much higher than the U.S. bonds, which are yielding 1.7%. I mean, it suggests that more rates are going to come. You know, Trump's going to do everything in his power to keep the economy strong and drive stock prices up. You may hate him, but he's heading into election year. And you know, people in the past, when you're looking at they vote with their wallets, they'll tell you, you know, anything they want to tell you of how they hate everybody. But if you have more money in your pocket, that's the way they're going to vote. That's how people vote. That's been proven for a long time. So Trump's going to do everything he can, whether you agree with it or not. I'm talking from a financial sense. Okay, feel free to frankkerseyresearch.com. Whenever I talk about this, I get tons of emails about how could you like Trump? He's a racist. He caused all the shootings last week. It's because of all this garbage and nonsense. This is about your money. That's why you listen to this podcast. But not only that, if you don't think stocks are going to go high, look at the companies buying back their stock. Over $1 trillion this year is going to be, they're going to be buying back. S&P 500 is going to be buying back $1 trillion in stock. I mean, you combine that with the around 2% yield, you're looking at a full yield between buybacks and dividends of 5-6% of the S&P 500. And I can tell you, it's going to lead to much higher earnings and much higher than most experts are forecasting. And we've seen that almost every single earnings season. Earnings are beating the estimates almost every single time when you look at the S&P and the total. I told you guys how to do that. Go to FactSet, Google FactSet earnings. Every 5 or 6 days, they come out with a full earnings report. It's like 15, 20 pages long. It's amazing. Just telling you everything, forward, all this stuff. It's fantastic. It's awesome. It's for free. Just Google it. Great information for you. But when I'm looking at the buybacks, plus, you know, people talk about, recession. They love that word. People love that word. Recession is coming. It has to come because this bull market, it lasts so long, and based on history, we usually have a recession every 6-7 years, and this is one of the longest bull markets ever. Right? So people love throwing around a recession, but lower rates are leading to a stronger housing market. We're seeing that data now. Consumers are still spending like crazy. Unemployment is still near record lows, while stocks are trading below their 5-year average based on forward earnings. I don't see a recession over the next 12 to 18 months, or through the time that the election comes, 2020. So, guys, that's how I see it.